A very good evening, everybody. Welcome to the webinar held in collaboration with SGX, REITs and REITs ETF, Building a Passive Income Engine. A very big thank you to SGX for sponsoring tonight's webinar. I'm Ming Hui from Phillip, and speaking to us in a short while will be Mr. Chua I-Min, a full-time investor, a speaker, and an author. He conducts classes at the SGX Academy, and he'll be sharing with us how investors like you and I can use REITs and REITs ETFs in your portfolio for passive income. First, let me share some exclusive promotions that are going on at Phillip Nova. From now till the end of April, From now to the end of April, you can trade the 18 Singapore stocks and 18 Singapore ETFs that we have shortlisted at a commission of only 0.05% with no minimum fee. On top of that, this month, if you place any SGX ETF trades for the first time with Phillip Nova, you will receive a reward of 30 Singapore dollars. You can visit our website at phillipnova.com.sg/promotions for more information. And for convenience, I will also leave the link in the webinar chat box. Before I finally pass this on to I-Min, please be reminded that if you have any questions throughout the course of the webinar, feel free to drop them into the questions box and we will address them during the live Q&A session towards the end. And now, without further ado, let's have I-Min speak to us.
Thank you so much, Ming Hui. So can I just get a favor from you? Is my screen looking okay and you can hear me okay, Ming Hui?
Yes, I hear you perfectly and I see your screen. Are you showing your webcam?
Oh, sure.
Okay, perfect.
Okay, so I well, wait. So, okay, you still can see me, right?
Yep, I can see you.
Okay, good. Let me just get started now. Okay, good evening, everyone. Thank you so much for joining us this evening for this webinar on REITs and REITs ETF. Very happy that I could share this topic with you because this is something I do practice very close to my heart, and this is the exact strategy I'm using to give me actually probably quite a decent retirement when the day comes up. So hopefully I can give you some investment ideas for today, and of course hopefully when the day comes whereby you actually need the money, you're prepared for that. Okay. A quick introduction of myself. I am I-Min. CFA stands for Chartered Financial Analyst, so it's investment destination, globally recognized. I am a SGX Academy trainer, as per what Ming Hui has actually introduced, and I specialize in this area called FA. FA, of course, stands for Fundamental Analysis, which today I'm actually using FA to look at REITs. So in fact, for all my courses, I'm using FA. I'm not really a TA guy. But yes, using FA to look at REITs. These are some of the flagship programs. I actually do hold them at SGX. So of course, hopefully one day you can actually join in some of these programs to learn more about FA. Standard disclaimer. So please take note, I am here on education purpose. So along the way, I may actually mention some company names just to illustrate the process. I'm definitely not here to give any stock tips, REITs tips, and so forth. So long story short, make money, be happy, lose money, don't scold me. Okay, now we have actually not much time today, only about 15 minutes. I'll probably just take the next 45 to 15 minutes to share the content. And I want to leave like the last 10-15 minutes for Q&A. So in the next 45 to 50 minutes, these are the three things that we will run through quite quickly. And of course, as per what Ming Hui said again, if you have any questions, you may actually just want to pen them down in the question box. I would like to spend more time. I think it's actually going to be more fun, whereby we have discussion rather than just hear me talk. So these are the three things we'll cover today. Overview of REITs, what is REITs ETF? So these are basic stuff just in case some of our friends here are very new to REITs. And of course, I'll just spend some time to talk about the strategies to build a REITs portfolio, which is my personal strategy, something I do on a regular basis to help me build a REITs portfolio, to give me passive income, of course, to help me achieve financial freedom at the end of the day. Okay, what is a REIT? Unfortunately, I'm not too sure how experienced you are in REITs, but I believe as of now, I think most of you already know what is REIT. So I'll just go through this segment very quickly. Again, if I go too fast, if there's any question, please just drop a note at the Q&A. Yeah? So REITs, real estate investment trust. Okay, so basically by REITs, you are buying properties. Okay, so investors to put their capital for investment into large-scale income-producing properties. So basically, this is the vehicle that pull capitals together. Then after with the capital, go and borrow money, buy property. Okay, property we rent out. Okay, then after that, rental come in, share with all the shareholders as dividends. So this is a very simple model for REITs. Okay, buy property for rental. Okay, so there are some uniqueness about REITs. They are on a trust structure, so this is actually not too important, but just let you know. Okay, some of the interesting things that apply to REITs, but not the rest of the stocks are this. So number one, they have mandatory distribution rules. At least 90% of the profit have to be distributed as dividend. So it's a must. It's a must for them to distribute dividends as long as they have profit. So this is the only instrument whereby based on black and white, they must distribute dividends. So unlike, I know that you can say that yes, the banks, Singtel, Singpost, every year they give dividends, that's correct. But if they choose not to, they could. They can choose not to. But whereas for REITs, based on black and white, they must give dividends and they must give at least 90% of the profit as dividends. So that is one thing unique about REITs. So the other thing here is this, there is a mandatory debt ratio limits. They can only borrow up to 50% of the property value. So let's say, for example, if they buy a property $1 million, maximum they can borrow is only up to 50%. So this rule is actually proven its worthiness during the COVID period. So in 2020, of course, we all know what happened to the properties in Singapore. There's a lockdown, nobody go to the shops, people are not going to the office. But throughout the whole COVID period, there is no one single REIT that collapse, get into trouble because of COVID or because of debt. Okay, so that was what happened. Even though there was lockdown, even though there's work from home, the office rental is affected, but there's actually no one office or no one REITs actually bankrupt or get into trouble because of the COVID. So this is one of the reason why, because they can only borrow so much, and even if let's say rental is affected, it doesn't really impact them a lot. So next, there is tax transparency. What does this mean here is this. So basically, there is some, what I call it, tax exemptions. Tax exemptions. So tax transparency is just the technical term. So like, for example, if I were to set up a company to buy a property, for example, so when the rental generated by the property goes to the company, it becomes income of the company, and of course have to pay corporate income tax 17% in Singapore. But in terms of REITs, when the rental goes to the REITs level, okay, the REITs level, there is no income tax. There is no income tax. And in Singapore, there is no income tax on dividend as well. Unless you're buying as a corporate, let's say you're buying as an individual, there is actually no income tax on dividend. So in that sense, the rental is income tax free. So that is another beauty for REITs. Another beauty for REITs. So again, I just want to stress here, it's only income tax free. So for REITs, they are still subjected to property tax, still subjected to stamp duties. It's just that income tax they don't have to pay. So these are some of the uniqueness, of course, benefit from REITs if you actually look at it from this angle. So again, like I said, I'm just going to go through this very quickly. Any questions you can ask at the back. Now, what are the REITs currently available? I would love to play a game if you're asking you to guess how many REITs available, but unfortunately, I don't think we have a platform for interaction. So anyway, hopefully you all can remember this number. So today we have 41 REITs, 41 REITs currently listed in the Singapore Stock Exchange today. So Singapore, we are actually the second largest REITs market in Asia, just after Japan. So that is how big our REITs market is, second largest in Asia. So don't see that, wow, Singapore is such a tiny red dot, you know, how much land we have. We are actually the second largest REITs market after Japan in terms of market cap. So another uniqueness for the Singapore REITs market here is this. If let's say, for example, you go and buy REITs in Japan, very likely all the properties are in Japan. If you buy the REITs in Malaysia, so very likely all the properties are in Malaysia. So very often, if you buy a property, buy a REITs in Singapore, you will get a basket of geographically diversified properties. So a lot of times, once you buy the REITs, you are buying properties from different countries. So in fact, so let's say, for example, you just want to buy a REIT that only has Singapore properties. Okay, so let's say you want to buy a REIT that only has Singapore. Of course, there are REITs with both Singapore and overseas properties. There are REITs with purely overseas properties. And let's say you just want to buy REITs with only Singapore properties. So in fact, there's only 5 REITs for you to choose from. So just to give you a sense of how geographically diversified our REITs in Singapore are. So these are the 41 REITs. So these are the 41 REITs. So just a little bit on how you read the REIT's name. The first word is the sponsor, sponsors. Okay, the first word is the sponsors. So these are the ones that basically form the REITs. And the second word is the property type. Okay, property type. So that is how you actually form the REIT's name. Another thing here is there's a lot of people confuse REITs with business trusts. I just want to highlight here, REITs is REITs, business trust is business trust, is two separate animals altogether. So they are not cousins, they are not brother and sisters, they are not, you know, father and son. No, they are totally two separate things. So what is affecting us here is this. So basically, for business trust, they are not subjected to the distribution rules, the 90% distribution rules. They are not subjected to the debt to asset ratios, those particular rules, so on and so forth. Also, please take note of that. And unfortunately, like for example, you can't really see it from their name. Like Maple Tree Commercial Trust is a REIT, whereas SPH REIT is a REIT. It doesn't mean that if there is no word REIT here is a trust. No, so this is a REIT. So that is something for the take note. So total 41 REITs for you to choose from. Now, let me just run through this part with a little bit more detail. So especially from a FA perspective, fundamental analysis perspective, when we look at REITs, what is the most important question to answer, or our main analysis point here is this. Okay, this property, 5 years later, 10 years later, can it continue to be rented out? So in fact, that is the main analysis or analytical point. So yes, of course, you look at dividend yield, we look at gearing ratio, so on and so forth. Okay, but in fact, the most important question to answer is whether this property, 5 years later, 10 years later, can it be rented out? Okay, so please tell yourself this. If you ever buy a REIT, you are a property player. You are investing in properties. As in all property investment, you probably will heard about this one. So what are the 3 most important points about property? Location, location, location. Okay, I'm quite sure you hear about it. So please, you should have the same mindset when you invest in REITs. So how do we do it here? There are so many REITs for us to choose. So how do we analyze them? So the first thing we'll do here is this. We will categorize them in terms of property type. Okay, property type. So there are 5 main property types here. So we have office, we have industrial logistics, we have retail malls, we have hospitality and healthcare buildings. So again, you will want to apply the question I asked to the categories. So take for example office. So this is a very interesting segment right now. Okay, like for example, of course, because of COVID, a lot of officers practices work from home, and now it seems that it's affecting the office quite a bit. So now there's two school of thoughts. I've been getting posts, and there's this very two school of thoughts. Okay, some actually thinks that okay, this work from home culture is actually going to continue. Okay, more officers are actually going to do that, and obviously more companies are going to do that. Then obviously they will actually affect the office rental. Companies will need less office space, bad for office building. So if you are in that camp, probably you'll want to be a little bit more careful when you invest in office REITs. So if you think that, hey, now the culture is work from home, you don't really need office space, or you need less office space, yeah, if that is you, if that is what you're thinking of, then hey, you shouldn't be investing in this category. Okay, so the other camp here is this, so they know that, oh, this work from home concept is not going to last. Eventually, you know, the companies will actually bring all the workers back to the offices. Yes, it sounds very good work from home, but from an office efficiency perspective, from an office learning perspective, it's actually bad. So for those who actually in this camp, in fact, office REITs, you should pay attention to it right now. Okay, because we are talking about all this work from home are slowly coming back to the office space, and obviously the demand for all this office space will go back to pre-COVID level, and in fact more. Okay, so I don't have answer. This is talking about the future. Nobody knows what's going to happen 5 years later, 10 years later. But my point here is this: you need to analyze, you need to have your opinion, and you invest according to your opinion. You can't say that I don't know, don't care, anyhow buy. No. So you must still formulate your opinion and of course invest accordingly. If I could share my opinion, again, I just want to stress the word opinion. Nobody knows what's going to happen in the future. I belong to the second camp. I belong to the camp whereby I believe work from home is not going to last. Yes, maybe after that there may be some hybrid solutions. So whereby okay, maybe for this particular worker, Tuesday, Thursday work from home, Monday, Wednesday, Friday go to office. So maybe there's such hybrid culture in the future. But I believe that more in a big way, the work from home have to go back to offices. So this is what I believe. And obviously, because of this belief, recently I've been paying quite a bit of attention on office buildings. I believe the demand will come back in a big way, actually. So I have been purchasing some office REITs. So of course, that is me. That is me. Okay, am I going to be 100% correct? I don't know. I wish I am. Okay, but my point here is this: you don't have to agree with my conclusion. You don't have to agree that okay, office is going to be good. Okay, what I want to put across here is at least go through this analysis process. Go and think through yourself. Go and find the answer yourself. Create your own opinion. So that is really what I want to stress here. Okay, so that is one main point I want to put across here. So the other thing, again, I just want to reiterate the point I mentioned just now. A lot of the properties are not in Singapore. So please don't assume that the whole world looks like Singapore. It doesn't. Like, for example, when we talk about office building, you tend to have the impression that it's going to be tall, it's going to be swanky, it's going to be nice, it's actually going to be in CBD, it's going to be in a first-tier city. So no. So some of the office building, it looks like schools to me. One particular one even look like jail to me. Okay, so not all are in the first tier city. I'm talking about the overseas one. Not all in first tier cities. Some are in second, third tier cities, and not all are in CBDs. So again, please, you're a property investor. At least I know. Of course I don't expect you to go and fly to the country to look at the property, but at the very least, go and visit the website. Go and see the picture of the property and ask yourself, hey, you know, this property, is this one you invest? Do you think that 5 years later, 10 years later, is it going to still capture rental or not? So why am I spending so much time here? Again, because like I said, so in fact, this is the main investment consideration that you should have, rather than just look at dividend, rather than just look at, you know, numbers. I know those are easy to analyze, but in fact, that one secondary. Most important is, hey, this property, do you think that potentially they can continue to generate the rental? Okay, the next segment is industrial logistics. So again, down here, even though they are all categorized in the same segment, but there are 4 different type of users, 4 different type of demands. So we have to analyze according to their demand rather than, you know, this segment. So there are 4 parts here. So of course, the 2 main part, as per what the title suggests, industrial and logistics. So they are basically serving different demand. Industrial, we are talking about factories. Okay, if you walk into industrial buildings, you see machineries, you see factories. Logistics, we are talking about warehouses. So you have to ask yourself, you know, going forward 5 years later, 10 years later, are we expecting more demand for industrial, more demand for logistics, or vice versa? And you invest accordingly. So the other 2 segments that we have here is business parks. Business parks, like for example, Ascendus, they are very strong in business parks. And the other one is the Sabana. Okay, so business parks. Okay, so of course it's mainly Ascendus. Ascendus is actually the main one. So what are business parks? Business parks is actually offices sitting on industrial land. Offices in industrial land. So again, you have asked yourself, does it make sense? That's the third one. And the last demand is actually data center. So this is up and coming. Apparently, a lot of all this REITs are slowly moving to data center. So we have 2 pure ones. We have Kappa DC REITs, and we have Digital Core. This is listed last year. So these are purely into data centers. And we have the likes of Ascendus and Mapletree Industrial Trust, slowly moving into data center as well. Okay, so again, let me just share my opinion. You don't agree with me, but you know, it's the analysis methodology that matters here. So personally, I'm not a fan of industrial properties. To be very frank, I'm not too sure whether it's good or no good, but it just puzzles me that who would actually want to set up a factory in Singapore? Either that, you know, I don't think Singapore is a top choice to set up factories. Something that I am not very familiar with, and I don't really bother to find a bit more. So that's why I tend to leave the industrial segment out. Okay, whether good or not good, I don't know. Okay, but you know, my time is limited. I just want to spend on something to me that's higher potential. Okay, maybe good, but I'm not too sure. Okay, so logistics, I like logistics. I believe that e-commerce is only at the tip of the iceberg. I think that e-commerce sales is actually going to increase. Still have a lot more rooms to increase. Now I see more and more people are buying bigger items from e-commerce. In the past, when you talk about e-commerce, it's all the small items. But now we are talking about, you know, I have friends who do renovation. They will just go online to shop from China factories and just fill a container to actually ship it back. I think this is getting more and more common nowadays. Buying fridge, for example. So the last fridge I bought, I didn't even bother to go and go to the malls to look at it. I just order online. So in that sense, you need a lot more warehouse. And of course, some of this warehouse is actually going to replace retail malls. So I think the demand for logistics is going to increase. And of course, it's a segment I like. I obviously like data center, up and coming. The demand is going to get stronger. If you go and read various reports, I think the demand will be increasing at an exponential rate for data center. Business parks make sense to me as well. I don't really see a need to have offices in the CBD area. I think business parks also make sense. No? So again, my opinion, industrial, I wouldn't pay so much attention, not to my liking. Good or good, I don't know. But since I'm not interested to find out more, I shouldn't be investing. Also, again, that is quite a golden rule for investment. I like logistics. I like data center. I like business parks. Okay, retail malls. So again, this is very classic example. If you are a believer that e-commerce one day will take over all the retail malls, one day we will live in a world whereby there is no more retail malls. Everything you want, you just go online and buy. Okay, then yes, don't buy into retail malls. But if you believe that retail malls will always has its purpose, eventually, yes, they will just coexist side by side, e-commerce and retail mall coexist, then of course, it still can be quite interesting. So personally, again, I belong to the second camp. So far, I'm actually still quite, what do you call that, confident in retail malls. Every time I go to malls, I still see very crowded. I see all the shops taken up. So I'm actually still quite confident, and obviously I'm still invested in them. So hotels, I believe this year is going to be quite interesting. So for obvious reasons, for the past 2 years, the prices for hotel REITs has came down quite sharply. If you go again, you go online and go and search about analyst reports. So we are talking about the recovery in probably, this year probably start recovery. Okay, the full recovery probably is the next year or other than 2024. So of course, if you actually want to buy some of these REITs at a depressed price, not getting very good dividend yet, now is still the time. Now is still the time. But then again, if you think that, okay, you can wait a bit later and buy when it's a full recovery, yeah, probably get dividend, but then the price wouldn't be the price today. Also, again, this segment can be quite interesting. So another thing to take note about hotels is that this is the most geographically most diversified segment. If my memory didn't fail me, like for example, Escort Residential Trust. Once you buy into this, you are the owner of properties in 14 different countries, one for 14 different countries. Also, if you want to have a geographically diversified portfolio, so hotels is the one that can help you to reach that the fastest. Okay, the last category, healthcare buildings. So we have two REITs. First REIT actually own hospitals in Indonesia. So what I understand is that is the equivalent of Mount E in Indonesia and the properties that they own. And of course, Parkway Life REIT, you'll be owning Glen Eagles Hospital buildings. You'll be owning Mount E Hospital building. And of course, some nursing homes. So again, please take note. Parkway Life REIT only help you to own the building. How much Mount E earn, how much Glen Eagles earn are not your problem, or not our problem. So they only just pay a rental to the building. So that's how it works. That's how it works. So obviously it's going to be a very stable REIT because I think Mount E has been there for the longest time. I can't remember, 30, 40 years. I don't think Mount E want to shift. Not easy for them to shift as well. So it's actually quite stable. But life is very fair. So when things are stable, when the rental is stable, you expect the price to be expensive. You don't expect the yield to be high. So, yep, these are the healthcare buildings. So once again, total, we have 5 categories: office, industrial, retail malls, hospitality, and healthcare buildings. I have shared with you my opinion. Again, I want to stress here, why am I spending so much time? Not so much about agreeing with my opinion. Please disagree as much as you like. What I really want to stress here is this: number one, please buy REITs, buy properties. These are the main thing to focus on. Look at the properties. Don't just buy because, oh, the REIT name sounds very nice. No. And of course, the main question to answer here is this: 5 years later, 10 years later, do you think that this property can continue to generate rental? Nobody know the answer, okay, but at least go through the process, form an opinion, believe your opinion, and invest accordingly. So that is one very important thing I want to share here today. Okay, so to find out more information, okay, later I'll do a live demonstration, okay, with the actual website. So you can actually find more about REITs, obviously, with SGX website. I will talk about it a little bit more later on the stock screener. And there is actually this report is a must read. Is a must read to all REITs investor. Okay, so let me just bring you on to the actual site right now. Again, Minghui, just don't mind confirm that you can see my browser. I'm just wondering there's any
Yes, I can see your browser.
Thank you so much, and thanks. Okay, you go to sgx.com. Okay, so let's talk about the stock screener first. What I did here is this: I went to sgx.com securities stock screener. So down here, you can just key in any REITs. So let's say, for example, Capital REITs. Okay, so you can see the price movement. You can have all the data here, and of course, you can read about it. You can go to the website from here. So financial statements, everything is there. Okay, so this is a place for you to find out more about the REITs. The next is the sector report, as I mentioned. So how do I come to this? You mouse over securities, and there is one part called research and education. You look under sectors. Okay, it's a monthly updated report, and I must say this is one of the most comprehensive report that I ever find. So far, whatever information I need now is actually all here. Can't think of anything else that I need that is not stated here. Some of the maybe I just share with you some of the unique information that is not easily available elsewhere. Okay, like for example, this one, the U spread, U spread. So for professionals, how do they actually value REITs? Is actually look at this U spread. They actually take the dividend yield of REITs minus off the bond yield. Okay, minus off the bond yield. Okay, and obviously, if let's say the spread is larger, okay, that means the price of REITs is actually attractive or undervalued. So if the yield spread is lower, okay, that means the REITs are actually expensive. So the blue line is the dividend yield, the yellow line is the bond yield, okay, and the green line is the difference. The green line is the difference. So every time this green line is high, okay, that means it's a sign that, or at least from the analyst perspective, okay, it's a sign that the REITs are undervalued or the REITs price are attractive right now. Okay, so of course the only thing here is this is actually shown on a consolidated basis. Okay, it's not like individual REITs. It's on a consolidated basis. Also, you can have a sense of on the overall whether REITs price is too expensive right now. Okay, like for example, now you can see that the green line is actually touching the 10-year average. So the price is actually quite okay, quite fair at this point in time. The other thing I believe is not easily available elsewhere is actually this, okay, institutional and retail fund flows. So for those who are interested to find out, okay, what are the institutional buying, what are institutional selling? Okay, it's a bit like, okay, thank you so much. Okay, so what are institutional buying, what are retail buying, what are they selling, so on and so forth. Okay, like I said, this is updated monthly. You can have a glance of it here. So what are the hot REITs among institutions, what are the REITs that people are selling? So yeah, this is quite interesting. Okay, good. I have covered REITs very briefly. Again, if I have gone too fast, you can just key in your questions at the Q&A box. I'll be happy to answer them later. So now I want to talk about REITs ETF right now. So yes, this is a very interesting product. Of course, is compared to REITs, this is something more recent. So ETF is basically a basket. A fund is basically a basket. But before I go to REITs ETF, maybe I just talk a little bit about what is ETF first. So ETF stands for Exchange Traded Funds. So it's an investment fund listed and traded intraday on a stock exchange. They aim to track the performance of an index, okay, and provide access to a wide variety of market and asset classes. So of course, for those who are familiar with unit trusts, for mutual funds, sometimes you walk to the bank officer will tell you, hey, your money is left idling. Why don't you invest in this fund, that fund? So it's exactly the same thing. Okay, ETFs and the unit trust is the same thing. It's just that when the fund is bought and sold over the exchange, it's called exchange traded funds. Okay, when the funds is actually bought and sold in banks, it's actually called unit trust or mutual fund. So please take note, you don't have these funds whereby you can buy from exchange and sell to the bank. No. So if it's an ETF, you can only buy and sell this particular fund in exchange. Okay. If it's a unit trust, you can only buy and sell this fund over the bank. So what I just want to illustrate here is this: both are the same fund. Okay, they are different in terms of how they distributed, but if not, the product itself is the same, or very similar. So pictorially, this is how it looks like. Yeah. So basically, a fund is a vehicle structured for investors to pool their capital for investment. Okay. So let's say, for example, I form this investment fund company. I split myself into multiple units, and I sell all these units to all of you here. And with the money that I raise, I go and buy a basket of instruments. A basket of instruments. So if you were to own a unit of me, let's say you own a unit of me, you are indirectly owning a basket of these instruments. Also, basically, this thing is called a fund. And of course, if let's say you buy and sell this fund through exchange, we have just bought exchange traded funds. So that is what ETF means. A very good example will be STI ETF. Okay, Spider is the company name. STI ETF. So there is quite a few STI ETF listed in the Singapore Exchange. So if you buy one of the units, you are indirectly invested in all the 30 STI component stocks. So that's what it do, or that's what it does. Now, back to REITs ETF. There are basically five REITs ETF, and again, in the report that I show you just now, you can have the information, and it's good to read it from the report. Then you'll get updated information. So now I'm actually back at my browser, and I'm not too sure why. Okay, good. It's not responding. Okay. Okay, so if I'm still at the report, hopefully you can remember how to get to this report. It's the same report, updated monthly. Yeah. So at the end of the report, they will actually give information about the REITs ETF. Also, again, if this is the first time reading a report, I would strongly suggest you reading all the words here. And now currently in Singapore, there is five REITs ETF. So please take note, out of the five, only 3 of them are Singapore focused. Okay, sorry, in fact, only two are Singapore focused, as you can see here. And these are the yields stated. So of course, the yield will be slightly lesser as compared to you buying the REITs itself. For obvious reasons, you actually need to pay the fund manager for it. You actually need to pay the fund manager for it. But you know, they also but they are doing a good job to deserve the fee. So let's say, for example, you don't know how to choose, don't know how to analyze, don't know what is good, what is bad. Okay, so it's best to leave it to a professional to do it for you, and obviously they are going to get a cut from it. But think about it, the yield is actually still very decent. As you can see here, it's actually still very decent, 4.99%. So imagine this, let's say your money is idling in a bank account, giving you like, I don't know, 1% or less, or might as well put some of them here. Okay, your interest or your yield actually go back by 5 times. So another beauty is this, once you buy this, you are buying a basket of REITs. So that again help to diversify your risk. So if you were to buy REITs individually, then of course, you know, it's more difficult for the diversify. You need a larger sum of money. But if you just buy a unit of, let's say, a Phillip REIT ETF or this ETF, you are just buying a basket of REITs. So one shot, you are properly diversified already. So that is another beauty of ETF. So all the information is here. So again, I would strongly urge you download the report and read it, and it's updated monthly. Now, the other three ETF, REITs ETF, as you can see here, the difference is that they are not just invested in Singapore REITs, they are geographically diversified. So you have Singapore, Malaysia, Hong Kong, Thailand, India, Philippines, as you can see here. For this Phillip SGX APAC dividend leaders, you are talking about Australia, Hong Kong, and Singapore. So this, we're not talking about properties here, we're talking about the REITs are geographically diversified. That means, like for example, Phillip 1, only Singapore REITs 34%, 52 is Australian REITs, 11% is Hong Kong REITs. So please take note of that. Okay, so if you prefer to have even more diversification, so if you buy Singapore REITs alone, you are already diversified in terms of geography. So yes, even though it's Singapore REITs, but a lot of properties not in Singapore. But if you even want more diversification, you can buy, like for example, these ETFs. That means you're not just talking about Singapore REITs and overseas REITs. Then obviously you have a more geographical diversified portfolio. Okay, so you can find all the information here. And let me just go back to my slides. Now, last 10 minutes, I just want to talk about how you should treat REITs and what's the strategy to build a REITs portfolio. Let's be very clear about this. So every investment instrument has their objective. So let's say, for example, you want capital gain, you go for things like growth stocks. So your $1 can become $2, $2 become $4 at the expense of risk. Okay, but for REITs, it's very clear. Okay, REITs is very good at giving steady dividend yield. Okay, I'm not saying that it doesn't give capital gain, it does. Okay, but it's not as good as growth stock, and it is well known and is in fact built to generate passive income for investors. So number one, okay, please make sure your objective is aligned first. If you are someone who keep thinking of you want to do trading, you want to buy today, sell tomorrow, buy today, sell, then sorry, actually REITs is not really suitable for you. But if you're like me, now thinking of retirement, want to achieve financial freedom, okay, whereby the passive income can cover my expenses. So in fact, REITs is the perfect instrument because REITs, so far they have been giving very steady dividends. And to me, is once this dividend can cover my expenses, I am financially free. Also, if you're like me, okay, then yes, REITs is definitely something that you should be looking at. Okay, so like I said, okay, this is me right now. I'm using myself example. I am using REITs to accumulate funds, and of course, eventually using to dividend to sustain my retirement. So this is actually what I do on a regular basis. In fact, on a monthly basis, I'll actually save about at least 20% of my salary into this retirement saving account. And every month I will invest in REITs. So of course, it's good to do it on a regular basis. On my case, it's monthly. And how you buy is on its own. I have a different portfolios. I have portfolios whereby I take more risks, but for REITs, right? So personally, I actually do this thing called dollar cost averaging. So every month I just spend, a fixed sum of money on REITs. Every month I buy, okay, to slowly accumulate that portfolio. So this is what I do. And of course, there are various ways to do it. I just want to share on what I do and which I thought was good. It has actually helped me accumulate quite a tidy sum right now. Of course, haven't hit financial freedom yet. If not, I won't be talking. Okay, but I'm definitely on my way there. So I do this on a monthly basis, invest in REITs and dividends. Obviously now I'm having dividends because I don't need the money now. I am reinvesting. And this is what happened. Every month I still pump the money here. Dividends come in, I reinvest, and hopefully you can see this become my snowballing engine. Okay, every month snowball, and of course one day you'll be large enough to give me financial freedom. Okay. Okay, now, so what do I actually do every month, or what's my REIT selection checklist for me to select the REIT? So I actually ask these three main questions. Obviously, there is more in-depth analysis, but for today's purpose, I sort of generalize it. So this is the minimum you should do to pick up REITs. So these three questions you want to find out: what is the dividend yield? Properties, is the rental sustainable, any growth story, and of course the loan related risk. What's the leverage, any risk of not meeting the loan conditions. So please before you buy REITs, go and ask yourself what's the dividend yield. So to a certain extent, it's almost like a fixed income. It's almost like putting money in FD. So you have to go and find out what's the dividend yield. You can actually find out from sgx.com, okay, the dividend yield. Later I'll do a demonstration, not to worry. And of course, there's this website. This is a third-party website called reitdata.com. You can also get it there. Okay, I'll do a demonstration, explain what's the difference. Okay, so maybe I just do it right now. So stock screener, as I mentioned just now, you can key on Capo. Okay, let's say Capo REITs. So you can see the dividend yield is here. This is the dividend yield. So the other one is the reitdata.com. Okay, so this is so why I actually like reitdata.com, because it's actually being sorted in a table form. Then if you want, you can actually sort the yield based on highest to lowest, so on and so forth. I just want to explain one point here. You can see that the yield is slightly different. So capital REIT in the reitdata.com is here 4.81, whereas for SGX you can see is 4.3. So there's some slight difference. Okay, it's not that one is correct, one is wrong. Is for SGX one, if you mouse over the I here, there is an element of prediction. So they're actually predicting forward. So what is the yield for this year? Okay, so whereas for REIT data is purely historical. Purely historical. So of course, to which is own, see what your preference is. Personally, I prefer to look at this number because this is something that already happened, is confirmed. It's already happened. So whereas the SGX one, there's an element of prediction. So that's me, and to which is own. So, but my point here is this: please go and find out what is the yield before you even buy them. Let me just get back to my slides. The next thing is about the rental growth sustainability. I have already spent at length to discuss about them. So again, the question to answer is 5 years later, 10 years later, this property, can it still be rented out? So it depends on demand and supply. Okay, I actually went through that. Where you actually found the information, there is actually one piece of information that you must read. Okay, at least for the first few times. So this is what you should do here. Before you buy a REIT, I strongly encourage you to go and visit their website. So a few things you need to do. Number one, you click on property portfolio, and please, as I mentioned just now, at least no need to fly down there and see, at least see on picture what are the properties you are about to buy. So you have all the information here, as you can see. So the other thing that I would strongly encourage you to read is this. You mouse over investor relations, then look at financial results. And we go for results rather than the business update. Go for results. Most of them will share their presentation slides. Their requirement now is half yearly, but all of them still actually do it quarterly. So of course, we go for the latest one. So this is one very good report that actually give you a very good overview of the REITs. So in terms of numbers, one of the main numbers I actually look at is this occupancy rates. So of course, occupancy rates is how many percent of the properties are being rented out. So personally, I only go for REITs whereby this number is more than 90%, which is not difficult to find. So the rest is very good information. Is not so easy to compare across REITs, but it's actually very good background information for you to understand more about the REITs. Now, the last part that I will actually look at is the loan-related risk. Okay, I want to understand if they are taking too much loan. So there's two ratios I look at. One is what I call the debt to asset ratio. Sometimes it's actually called gearing ratio. There are times it's actually called leverage ratio. So unfortunately, there are different terms talking about the same thing. So it can be gearing ratio, it can be leverage ratio, it can be debt to asset ratio, so on and so forth. To pass my personal test, I want this to be less than 40%. So these numbers, you can actually get it from the report and data I'll show you again. And you could also get it from the readdata.com. And the other ratio I'll look at is interest cover ratio. Interest cover ratio, it shows the income divided by interest expense. I want this number to be greater than 3. Okay, so let me just share with you how you get these numbers. So again, this is the investor report. Okay, this is the investor report just now. Here, you can see interest cover 3.9, so you'll pass my test. So in capital case, they call it leverage. Leverage. So 38.4, less than 40, pass my test. So read data. Again, read data is actually very good in the sense that they actually list down the gearing. So personally, for those that is above 40%, they don't exactly pass my test. It's definitely not my first choice. Of course, I'm not saying that if it's above 40 means they're going to be in trouble. No, definitely not that. But the fact is, the higher this number, the more risky. And if I have a choice for the lower ones, obviously I'll go for that. So you can get a bird's eye view here, but it's always good to verify with the PowerPoint, the report. This will share the latest numbers. So to summarize, this is what I do on a monthly basis. So every month I will just run through the list of REITs, 41 of them. Of course, there are some REITs, because of the property I will never touch. So easily I will eliminate about 12 of them already. Then I will just check at that point in time, is the yield acceptable? There are certain benchmark that I use. So yes, after that, I filter out those acceptable. So rental growth and are sustainable. So like I said, there are about 12 REITs. Personally, I will not touch. Don't ask me which one. And again, it's very subjective. It's actually very subjective. Okay. Then I'll eliminate that. Then after that, I'll see if they pass the loan test, which the two ratios. Okay, so whatever that go through this filtering process, whatever pass, so usually I left about, now the price is a bit lower, I can get about 8 to 10, then they'll be inside my watch list. Like I said, every month I'll buy 1 or 2. Then I'll choose the first 2 to buy, then I buy for this month. Okay, and I actually repeat this process month after month after month after month to build my REITs portfolio. So the other thing here is this, I try to diversify as much as I can. So I wouldn't buy the same REITs unless I have bought 5 other different REITs. So let's say, for example, today I buy Kappa REITs. I have to buy 5 other different REITs, then I buy back Kappa again. So this is what I do. So over time, in fact, today I just checked, I've done this exercise for 3 years already. So over time, I have a decent REITs portfolio, well diversified over different REITs over different time. Okay, now they are giving me steady dividends. Quite happy. But of course, now the dividends I will reinvest them. Okay, but see the dividends come in. At least I have more secured for my retirement when the day actually comes. So this is what REITs is actually very good at, giving passive income. And you need to build a REITs portfolio of REITs. Okay, good. Yeah, timing just nice. This is the conclusion. Dividend yield is key, but high return, high risk. Again, I know I've said this a lot of times already. End of the day, you are buying properties. Buy what you understand. If need be, go shopping. take office lift. Okay, like for example, every time I go shopping, people look at the shops. I always try to see whether got empty units or not. That's what I do. That's what I do. And of course, overseas properties, the risks are higher. Okay, so that's don't forget the two ratio test. Okay, very important. Okay, great. Good timing. I'll just spend the next 10 minutes going through the questions. So if you have any questions right now, please key into the question box. While you do so, I just want to share some information for you to contact me. If let's say after today's session, you have any more questions, or of course, if you just want to remain contactable, you can like me on my Facebook page, facebook.com/IamChua, or either that you can just scan on the QR code and you'll be receiving my investment thoughts on a very regular basis. So in fact, now almost daily, I will share some investment thoughts. So obviously this period is on the wall. I've been tracking the wall quite closely. And yes, like for example, the market rebound today is not a surprise because it seems that the diplomatic talks is working. At least the both sides they see hope in the diplomatic talks. And of course, if you have any question, please ask. I'm happy to answer. But please take note, I am not allowed to answer question like, can I buy DBS? Can I buy UOB? Sorry, I'm not allowed to answer questions like this. Trust me, I'd love to answer them, but I'm not allowed to. So, but anything with regards to analysis, I'll be more than happy to share. Okay, in SGX, yep.
Sorry, please go on. Thanks.
Okay, so like I said, like I mentioned, I do courses in SGX. If you're interested in my webinar in SGX, the next one coming up is going to be on 23rd March. So this is a free webinar whereby I talk more about FA, fundamental analysis, and for this one in particular, talk about financial modeling. So this is one of the FA process that help investors to do in-depth company analysis. So do come, it's free anyway. Learn something, can never go too wrong if you learn much, learn more things. Again, you can scan on the QR code, or either that you can just copy the link. So probably it's easier to scan on QR code. Okay, lastly, SGX have quite a bit of resources for investors. So these are some of them. If you're interested, you can scan on this QR code right now, and you have access to quite a number of SGX resources. All these are for free. Like what my participants always say, hey, it's free lah. You know, these are free and good stuff. So why don't I just make use of them? And I think yes, the Telegram. For those who actually want to receive the latest on the Telegram, you can scan here to join. Yeah, quite a few things to scan. Okay, good. I am done. I will pass the stage back to the host, and I believe she has some question for me. So, Ming Hui, please.
Yep. Thank you for your sharing, I-Min. And moving on to our Q&A segment, our first question for the night is, what is the minimum amount of funds do I need to invest in REITs?
Okay, so of course, now the units, it's in 100 shares. So for example, we have REITs that are 40 cents, 50 cents. So technically speaking, $50 can buy your REIT. Okay, but of course, you have to pay attention to the transaction fee. So I believe Phillip's actually gave you a good deal. But then again, I think if you spend $50, the transaction fee is actually still going to be quite high. So generally speaking, of course, these are quite subjective. We said the minimum number should be $1,000 to buy REITs. $1,000. I believe maybe Ming Hui can help me here. If let's say they buy some ETF, and I think a very special promo, the transaction fee is low, then probably can spend a lower amount.
Yep, we have a promotion going on that our commission is at 0.05% right now for until the end of April.
Yeah, so in that case, if transaction fee is not an issue, like I said, $100, $200 can really start you buying off the REITs really. Yes.
Okay, thank you for your answer. The next question is REITs a long-term or short-term investment?
Long term, definitely. Long term. For the way I do it right now, okay. So now I'm actually long term. I don't even, after I buy, right? Of course, before I buy, I do my analysis. But after I buy, in fact, I will forget about the buying purchase price. I don't bother to go and remember the purchase price because my intention is to hold it for long term. That's one. Number two is, of course, I do sell, but the reason I sell is never about, oh, I make 10%, I make 20%. So the reason is I sell is because I lost faith in that property lah. So let's say, for example, now I am still confident about retail malls, and one day somehow this opinion has changed, I'll just sell. It's never a function of, oh, I buy at $1, I must sell at 10 cents. No, no. And in fact, ideally, what I really hope is this, even when I pass on, I can pass my REITs portfolio to my next generation or to my daughter, and it can still continue to create a passive income for her. So this is a very different mindset about REITs investing. So I know a lot of people still buy stocks with the hope of getting quick buck. Buy $1 today, sell 120 tomorrow. Obviously, it's not going to work, or at least most of the time. So for REITs, for us, it's long term, and this is how we process. Okay.
All right. Okay. The next question is, how fast can I learn about REITs investment if I am a beginner?
Okay. So basically, after today's session, I would strongly encourage you to start investing. Because learning, there is no end. Learning, there's no end. I've invested in REITs for, I don't know, 20 years, but I cannot say that I know everything about REITs. So it's a lot of time is you invest and you learn along the way. I think once you get the few main concepts correct, like I mentioned just now, it's really about investing in properties. You think in terms of long term. Okay, I believe you can start, but start small, and you learn along the way. So I don't see as a case whereby, or you should, I don't know, take 2 to 3 years to learn, then after that invest. No. So of course, I do have courses in SGX on REITs. So if you're interested, you can take to just learn a bit more. Okay, but like I said, the whole process is going to be the same. Of course, I'm just going to illustrate with more examples, more calculation when there's a longer course. But whatever I presented, the process is there already.
Okay, thank you. The next question is, do you think it's better to buy REITs from exchanges or to invest via robo-advisors?
Okay, so I always say it's not a matter of choice. Okay, so in terms of stocks, it's not like property. Okay, it doesn't cost $1 million, 1.5. If you buy a property in Orchard, you cannot buy a property in Novena. So a lot of times is we were just going to do both. So to me, this question is almost like asking, hey, should I eat chicken or should I eat pork? The good thing about REITs, about ETF is you can actually do both. And I think you should try both. Somehow then after that, there is the thing about all these instruments is it's very hard to say which one is better, but see which one is more suitable. So like, for example, personally, I don't go into robo. I'm not so into ETF because I have all the time in the world to do my own research. I can all the time in the world to do my own analysis. That's my day job. Whereas if let's say you are a busy professionals, you have no time to analyze, hey, maybe you should just let the professional do the work. Yeah, pay him 0.5% or pay him 1%, whatever. But he probably going to do better for you than you try to squeeze time to do yourself. And I think if in doubt, just try everything first. After that, you probably have a good sense and you focus on more. Yeah.
Okay, thank you. And I think this is the last question we have of the day. Someone is asking if you can share a bit more on the approach for REITs ETF versus individual REITs again, especially for first-timers in investments.
Okay, thank you so much. So of course, there are various ways to do so. So to me, I think if let's say I want something very automated, that means really minimum effort. I just want to make my money work. I don't want to go and read, don't know what financial statements, don't know what read, don't know website, don't analysis. So number one, ETF is going to be a lot better than buying your own REITs. That's number one. Okay, so let's say you want really a minimum effort, ETF is going to be better. But of course, as I mentioned just now, you have to pay people to do the job that you did want to do, okay, which I think is quite fair. So number two, if you're to do that, I think it's not wise to, let's say, like one shot go and buy. Let's say you have 50,000, tomorrow go and buy all the REITs ETF 50,000. No, okay, because if history is a guide, the REITs also go through volatility. It has its ups and downs, so it's not wise to just go and buy. Just in case you buy everything on the up, then you'll be losing all the way. So you should be diversifying in terms of time as well. So what people do is they just buy REITs ETF on a regular basis. Every month, 1,000, 1,000, 1,000, 1,000 on a regular basis on the same ETF. And because the ETF is already diversified, over time, same thing, you will still have a diversified portfolio by a different time, and you actually have a more decent, you also have a decent REITs portfolio. So that's how I see ETF versus REITs. Of course, if you're like me, you have opinion that this REIT is better than that REIT. You don't mind spending more time to learn about this property versus that property, then of course buying individual REITs is better. My return tend to be higher, but of course the effort spent is going a lot more. But then if you want something simple, start with REITs ETF. Just make sure, please, don't just buy one shot. Do like a regular investing. Then you should also get very decent results.
Okay, yeah, thank you, I-Min. We will conclude our Q&A session here since we do not have any more questions from the audience. And everyone, if you have any further questions for I-Min, you can send them to us via the survey that will appear at the end of the webinar, and we will get back to you via email. Yeah, so thank you, I-Min. This was a very insightful session as well. And thank you, SGX as well. And thank you very much, everybody, for your time tuning into this webinar tonight. We'll be sending everyone a link to today's webinar recording so you can watch it again if you would like to. And that's all for today. Thank you, everyone, and goodbye.
Okay, bye-bye. Thank you so much, everybody. Thank you.